welcome you all on the WOW series, which we have started last year with the intention to promote women member as a faculty. So in this series, today we are coming up with the subject 360-degree knowledge on ESOP. And I recognize the presence of our chairman WRC CA Murtaza Kachwala, CA Niki Shah, speaker for the day, Pinky Kedia, Vice Chairperson of Women Empowerment Committee, and CA Charmi Shah, coordinator for today's session. So before formally start the session, I request everyone to please put your hand on your heart for the ICI motto.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you, everyone. So, friends, this year we have very energetic Chairman WRC Murtaza Kachwala sir, and under his leadership, we are witnessing a lot of new initiatives and keeping members' interest in large, and with his vision and theme lead, which is a leap towards excellence, achievement, and development. We are keeping programs not only for the practicing chartered accountant, but for the members in industry as well, and of course, students also. So first, let's hear from him first about his vision. So now I would request to our chairman for his address to the participants.
Thank you, Shweta madam.
Thank you, sir.
Good afternoon to all. Let me first thank CA Niki Shah. Niki madam, thank you very much for accepting our invitation, joining us today here, and agreeing to share your valuable knowledge with all the participants. So thank you. Let me also thank Charmi Shah, the coordinator, and Charmi is always available for any of the WIRC or ICI like this thing. So Charmi, thank you for sparing your time and for doing the selfless service. Let me also thank the chairman of the Women's Empowerment Committee, Shweta, and Vice Chairman Pinky. I think excellent work being done by both of you, and for the whole Women's Empowerment Committee to keep up the good work. This unique, I would say, the concept which was coined in the last term, Women on Wednesday, where like it was decided that like we invite women to speak and on different topics. And I think both of them, along with the Women Empowerment Committee, have continued this trend, and such unique topics and such new speakers. So really refreshing, and it helps in spreading knowledge. See, at WIRC this year, the theme was lead, and we said excellence, achievement, development. But then we listed 5 goals, and we also listed certain actionable items which we wanted to achieve. And if I were to only touch upon 2 goals, one was how can we update members' knowledge on various technical subjects. Hence, we keep on doing various programs on multiple things. But at the same time, we are also now starting certificate courses of ICI, And we are also planning, and we have started doing various refresher courses. So we completed one refresher on accounting standard, one on Ind AS. Right now, the intermediate refresher is going on every Friday, 2 hours. Then we are starting one international tax, then one cooperative, then one insolvency. So members can understand what is happening in a particular subject, and if they want to practice in that area, they can pick up. The second important goal which we kept is adoption of technology. And for that also we do various programs, 2 hours, 3 hours also, a 15 hours spread over 5 days also. And we are even now doing the courses where you can really learn hands-on data analytics, 60 hours, and hands-on presentation and Tableau and Power BI, 40 hours. Coming to today's topic, I think with the whole of startups now again coming into place, there are all of these guys who have the business idea, but then they need support on everything else, on all other front. From making an agreement to making a business plan to getting the finance from bank. There are so many things which are required, and a chartered accountant can help. But I think one important aspect which is becoming very, very important again in today's day and time is the compensation. And one important aspect of this compensation is this, and which is really critical. And I'm sure Niki madam is going to cover a lot of it today from various angles. How do you make, what are the plans, and how do you even tax and multiple angles, right? It is easy, but it is really complicated as well. And if you learn that, I think this alone, if you consult to startups and even to companies which are now getting listed on MSME exchange and main board and all of those, I think this by itself could be a good revenue stream for a practicing person or a consultant. Before I hand over back to Shweta, I think one question from, I think, Ms. Radhika here on the chat box. So, madam, there are two courses. One is part 1, which is data analytics, where we teach Python coding and SQL database, 60 hours, Saturday evening 2 hours, Sunday morning 2 hours, 9,000 rupees is the fees. You can go to WRC website and you can register. The 5th batch is over. We're launching the 6th batch. And the part 2 is 40 hours learning, again Saturday, Sunday. And we charge only 6,000 rupees, and we teach Power BI and Tableau. So like from various data that you get, how do you make bars, charts, diagrams, and you present? You can even go to a board meeting or an audit committee meeting and present by dragging and dropping the data and showing various type of charts and graphs to the board members or to this thing. And in case, I would also request, madam, if you can just drop us a mail at wirc@ici.in, and someone will even write back to you with all the course details. So, but thank you for showing the interest as well. And with that, now let me hand it over back to Shweta. Thank you very much for giving me the opportunity. Over to you.
Thank you, Chairman sir, for letting us know about the activities and initiative at WIRC. So before moving further and handing over charge to Niki, I request to Charmi Shah for her brief introduction. Charmi, over to you.
Thank you, Shweta ma'am. First of all, thank you, Chairman sir and Secretary madam, always to give me the opportunity, and thank you, Pinky ma'am. So to formally introduce Niki ma'am, she is highly accomplished business consultant and a registered valuer for security and financial assets with IBBI with over 17 years of experience. She is currently a partner of SN and Company. She's also done every registered valuer services, business growth services like valuation, FEMA advisory, RBI compliance, financial modeling, idea to implementation course, business setup services for and outside India. She has also been a keynote speaker at various summits, Women Entrepreneur 2020, Franchise and Startup Summit 2019, Retain Leadership Summit 2019. She's also esteemed clients include NSC, Pepe Jeans, Steps at Go, etc. For her background, she is an fellow member of ICAI and a graduate from NM College. She is also visiting faculty with PBAI RVO for training valuation. She is also bagged. Honors includes the Statement of Accomplishment offered from the Acumen and Goldman Sachs 10,000 Women. She is currently partner of SN& Company, and her firm has been awarded the Best Risk Audit Firm of the year 2019. And
Wow.
she has over 17 years of experience. With this brief introduction, I hand over to ma'am. Over to you, ma'am.
Thank you so much, Charmi. And listening to this charming introduction, I was feeling, अरे wow, बहुत कुछ हो गया यार ये तो. So thank you for making me feel good and confident today, Charmi. Thank you so much. Thank you, Murtuza sir, Pinky, Shweta. Thank you so much. And you guys don't need to thank me. This is our family, and we are always going to be there to contribute back to our family. So no thanks required for this. So let's take up the most interesting topic today, ESOP. As Murtuza sir very rightly pointed out, ESOP is not something new. You know, it was since Companies Act 1956. And just when I was thinking यार ESOP शुरू कब हुआ होगा, तो मैंने फटाफट ये चल रहा था तभी गूगल मारा कि let me just know at least कि ESOP शुरू कब हुआ था. So yes, ESOP in the world over was before 1956. India में it started in 1985. Wipro was the first company, maybe documented first company, जिसने ESOP शुरू किया था and had given ESOPs to their employees. But the real momentum came in 1990 when we started understanding and knowing that Infosys ke employees became billionaires. That was the real moment when people started coming to know the value of ESOP and how to use that ESOP. Yet, for many years, ESOP had always remained as a tool for bigger companies to retain their employees, to give return to their employees. But again, ESOP ने अपना रंग दिखाया, and it started showing more colors in recently when Flipkart, one of the startup companies, has an ESOP pool created of 17,000 crores. So again, a lot of young millennials want to join startups. Why? Because they believe that if they get ESOPs and tomorrow their company becomes a unicorn, unki earnings gonna be much more higher than the basic salaries, and the one of the reasons contributing to it is ESOPs. So hence, today whenever we open a newspaper, I believe जितने news हमें listed companies या bigger companies के बारे में मिलते हैं, equivalent or at times ज़्यादा news हमें मिलती है regarding the startups. How many of you agree to what I'm saying? You know, if you are, let's make it a little interactive. You can raise your hands and tell me yes. If we open newspapers, we open any other articles which gives us what is happening in the market today, we are able to see that yes, jitni news listed companies ki, bigger companies ki, usse zyada news we get to know about the startups, and also of the startups जो आज है 2 महीने बाद देखेंगे अरे यार ये तो बंद हो गया. Pretty normal, not something which people are not used to today. That yes, you will find a startup, which is worth millions and billions of rupees, and then within a couple of months, not even years, you might see that the startup is vanishing, or you might see the news coming that ये startup ने इतने लोगों को, इतने employees को निकाल दिया. So now, living in the startup world, they are the ones who has again brought the ESOP into limelight, and hence has become the need of the hour. So what we plan to do today is we give you a 360-degree coverage on the ESOPs, explain as much as I have within the available time that we have today. So our agenda is going to be, we will understand ESOPs, the terms that are involved in the ESOPs. Second, how today startups are using it. When I use the word startup, it does not mean that listed entities or SMEs or bigger companies cannot use it, but I will be more focusing on startups because they are the ones who are currently exploiting ESOPs to the core. And hence, I would believe we'll use the word startups more often in our presentation. So how are they using the ESOPs? Third, we will also cover on what are the basic methodology of valuation of ESOPs, when the valuation of ESOP is required, the basic structure of ESOP. And the last we'll try and cover is how creative and innovative we CAs are, because any innovation in any financial instrument that comes in cannot happen without CAs or lawyers in place. And I'll show you a couple of new innovative ways in which today ESOP scheme is being used by the startups. I'm sure it's going to be very, very creative and innovative, and I share that part as well. So that's how I plan to take up the entire session. And the last part, we will touch base upon the tax part, which my partner is going to be taking up. And then post that, if there is any Q&A, we'll do it. Shall we begin? Okay. So, Shweta, you can just confirm that I'm properly audible.
Yes, ma'am.
Yes, you are audible.
Perfectly
Clearly audible.
Thank you
Perfect.
so much.
Yeah.
Okay. So the first understanding comes up is on what is ESOP. As the name says, and as the name suggests, it is the employee stock option pool. So let's just break it down and go word by word in the understanding. When it says employees, obviously, the primary understanding that ESOPs are for employees. Second comes is the stock. Obviously, it's something which is related to shares of a company. Options. So the core part for understanding here is the options. As to let's understand what is an option. So as most of you, I'm sure, dealing into options and futures on stock exchange are aware of what is options. A similar meaning ESOP also has. So ESOP is a derivative instrument. So options are a derivative instruments that derive their value from some underlying asset. And in our case, the underlying asset is usually the shares of that particular company. Options are a right, but it is not an obligation which the buyer has to either buy or sell a particular instrument at a specified price. And that too, they can do it only within the specified time. So that's the general understanding of what is ESOPs. Options, same understanding applies to ESOPs too. Now, options have three categories. It can be a call option or a put option. So call option means you have a right to buy, and a put option is a right to sell. Usually ESOPs are a call option because it is a right which the holder of the ESOP has, that they can buy the shares of a particular company. Hence, it is a call option. In terms of exercisability, we have again two options, which is it's an American option or a European option. Wherein we say, well, let's understand what is an American option. As we said that the option can be exercised on a particular time period. Can anybody from the participants tell me what is an American option? Let me see if participants are awake or I've already made them doze off.
I don't have any idea.
Okay. Okay, so let me explain it here. Now, it's an what is an American option? So American option is if so whatever option has a time period within which you have to exercise. Now American वाले बोलते हैं बॉस हम हमारी मर्जी से exercise करेंगे जब हमारी मर्जी हुई तब. That means if the option is for a period of 2 years, then the option holder has a right that within that 2 years, at any point in time, they can exercise the ESOPs. Whereas in case of a European option, it happens that there is a limited time period with the only they can exercise it at the end of the period. Exercises are only on the maturity, only at the end. That is the difference between the American option and the European option. Now, the third concept is the payoffs. What is the in the money, at the money versus out the money option? In which case, suppose, for example, the ESOP scheme says that, hey, if you want to buy the shares of this company, you need to pay me 10 rupees. So that's the price of the ESOPs. Now, the value of the shares, if more than 10, then obviously the holder feels that I am benefiting and hence they will exercise it, in which case we call it is in the money. Whereas the second option is, say for example, the price of that shares have gone down to 2 rupees and the option holder ka exercise price is 10 rupees, तो बोलेगा यार मैं क्यों खरीदूं, मुझे 10 रुपया दे के मुझे 2 रुपए की चीज मिल रही है, which becomes out of the money, which is why they would not be interested in exercising the option. So that's in the money, at the money or out of the money. Obviously, when we say at the money, it is the price, the exercise price is going to be same as the asset price. As I mentioned, that ESOPs are usually call option. They are American option is what is granted, and generally they are granted in the money cases only. Now, this is the most important thing, that we need to understand what are the key terms which are related to ESOPs. So first of all is the ESOP scheme. So whenever a company intends to issue ESOP to any of its employees, the first and the foremost thing that they will have to do is create an entire scheme. A scheme is an entire document wherein all the terms relating to the issue of ESOPs and the issue of shares are mentioned in that document. So that document, which ultimately gets filed with the ROC, is called as the ESOP scheme. Now, second comes the grant letter. In terms of the grant letter, whenever the company issues grants, share, ESOPs to its employees, they are communicated via the grant letters. The third is the vesting period. Now, what happens is, say for example, usually we have seen that in case of startups, they are giving ESOPs to their CTO, to their CEOs, to their CROs, and they want to retain those talent. In which case, the company says that, hey, I will give you in 2022, there is a scheme which is being floated, and I'm issuing a grant letter in, say, July 2022. There is a, as per law, there is a minimum vesting period of 1 year, after which only the ESOPs can vest. So what is vesting and grant letters? Today, when I issue a grant letter to an employee, I'm only telling him that, hey, I find your talent good and I wish to retain you, but based on a certain conditions. If those conditions are satisfied, then only I will be giving you this shares, which becomes as a vesting conditions, and the time period after which you become eligible to acquire those shares is called as the vesting period. So there is a difference. There we see 3 dates. One is when the ESOP scheme is prepared. We see a grant letter wherein the letters are actually issued or communicated to the employee that, hey, you are eligible for ESOPs and this many number of shares is what I'm going to be issuing it to you. Third is the vesting period. The conditions and the period, once they are completed, only when they become actually eligible to issue, to exercise their right and get the shares. So that is the vesting period. The third important point is strike price. Now, strike price is the price at which the shares are going to be issued. So that would be mentioned in the ESOP scheme. Exercise date is the actual date on which the shares, the ESOP holder is going to be exercising his right to buy the shares. That is going to be the exercise date. Grant date, we know the date on which the grant letter is issued is the grant date. Exercise period. Now, usually the ESOP scheme is for a particular period. Say usually we see that a particular scheme is for 3 years or 4 years. So then that entire period of 4 to 5 years is the exercise period. Now, say in July 22, if the letters are granted, post which after 1 year, minimum period of 1 year, you get is the vesting condition or the vesting period. Post which the third period comes as the exercise period. Now, how much time does that individual have? So that individual has a period of say 4 to 5 years within which he can exercise his right and acquire the shares of that company if the ESOPs are vested upon him. That is the exercise period. Spot price is the current price of that underlying asset. Graded vesting, very interesting concept. What happens is not everybody is given the same ESOPs, and also not everybody is given the same conditions. Say for example, we find that a higher level authority is given a particular ESOP, and that can also be, say I agreed on an ESOP of 5%. Not necessary that you give an entire 5% on the vesting date.
you can have a graded vesting, which means that out of 5% also, the company decides that on completion of a certain vesting conditions, only 1 or 1.5% of the ESOPs will be vested. After that, over a period of time, a proportion of the ESOPs can keep on vesting. So that is termed as the graded vesting period. The last time to expiration is again from the moment the shares are vested, from that date till the last date is called as the time to expiration. So these are the basic terms related to any ESOP scheme, which we must understand. Then only we will be able to understand the ESOPs in detail. Now, the most important questions that comes up is when to create an ESOP scheme. So I deal with a lot of startups, and nowadays I'm seeing is that kuch bhi nahi hoga, you know, zero revenue, you are at an MVP stage, hardly something, and people would come to you and tell you, madam, mujhe ESOP pool create karna hai. Why? Bolenge, nahi, I am eyeing some angel investor, some VC to come in and putting money in my company, and hence I want to create the ESOP pool. Aap mera itna ESOP pool create kar do. So very important point is to understand when is it necessary and when is it going to be beneficial for you to create an ESOP pool. Now, in the life cycle of a startup, there are various stages: pre-seed stage, seed stage, early VC, late VC, growth, series A, series B. These are all the terms which I'm sure all of us are aware, because we are reading these terms very frequently in the news. Now, what are these terms? So for a life cycle of a startup, usually it begins in the initial stage. They are determined on the stages how they are raising capital from the market. So first is a pre-seed stage, wherein usually it is the friends and the family who is going to be investing in the company and make the company grow. So it is usually bootstrapped, which is where I feel there is no need for ESOP to be created, because you are not even sure whether the company is going to take off or it is going to shut down too soon. The second stage that comes up is the seed stage. That is a stage wherein actually some finances are coming into the company and some external investor is putting in the money in the company. So that is a stage wherein, yes, ESOP pool can be created, and the investor may ask that, boss, I don't want my dilution to happen to a greater extent, and hence you please create the ESOP pool at the first end. But whenever a VC is entering into the company, before that, he would definitely want that you go and first create your ESOP pool. And this is not once created. Once the ESOP pool is created, as you go higher, at times even they get revised. And I'm sure you must be reading that certain company has increased the pool size with so much percentage or so many number of shares. So that all happens depending upon the investor that are coming in and how they are seeing that the further acquisitions or the company's growth is going to be looking like. Because what we have also seen is that people not only uses ESOP for their employees, but people are also using the ESOP pool during the course of acquisitions. Whenever the company is planning to acquire a few businesses, even to their founders, they plan to give ESOP, and hence that is also a part of the ESOP pool and the entire strategy. So to conclude, usually in the startup life cycle, once you are eyeing an angel investor or a VC to come on board, that is where definitely an ESOP pool is created. You have multiple options, both the options, the trust or the other direct. You have options in which your pool can get created, but yes, creation of an ESOP pool will be a necessity. I think we'll finish up the entire stuff, and whatever questions, if there are from the participants, you can put it up in the Q&A chat box and we'll take it up all at the end.
Yeah, that's better, I think.
Yeah, cool. Then there comes again an important point as to how do you communicate to about the ESOP that you are going to be granting. Now, the very interesting thing happens at times. People come and tell me, startups, as said, if it's an early stage, they have hardly any valuation. Say at times they have a valuation of 20 crores or 50 crores when they're raising the first rounds. At that point in time, they come and tell me, madam, mere ko ek acha tech banda mila hai, technology guy. I want to appoint him as the CTO. I'm thinking, let me give him 0.5% ESOPs. And even when they want to give 0.5%, they feel, oh my God, that's going to be so big amount that I'm going to be giving to them. But the most important point to understand is that what is in it for the employee? How are they perceiving it? What usually happens is when you communicate to them in terms of percentage at a very, very early stage, it becomes very difficult for the employee to understand that how much are they foregoing in the current scenario to get ESOPs. And hence, it is always better to communicate to them in terms of their valuation or in terms of the number of shares. Like, for example, if we tell them, hey, you're going to be getting, say, 2000 shares of the company, and the company's worth at that point of time is going to be like 10,000 shares. So you will be getting approximately worth of 20 lakhs, which is where the calculation becomes much easier vis-a-vis compared to communicating in terms of, say, I'm going to be giving you 0.5% of the company's equity. But this is a method of communication, not like a thumb rule. Similarly, what here we are trying to project is not a thumb rule, but what we have seen based on the past trend as to how much people are giving it in the market. When it comes to the co-founders or the CTOs or the technical team, usually it is a percentage which is awarded to them as a percentage of the company stake. But when it comes to a senior level team, it is usually a percentage of their base salary, which can be 0.5 to 1x of their base salary. Such, obviously, these are no thumb rules, but just to give an idea or an indication as to how much a particular person can be given in terms of ESOP. Definitely, higher the salary, lower the ESOPs, and lower the salary, more the ESOPs, because that is how a person is being compensated for being. In fact, we recently saw one of the cases wherein a person was a CTO, and a startup company, and the employee was ready to put in 15 lakhs into the company as his price for buying the ESOP after a year, whereas the company is just at the stage wherein they are building the products. But yes, the valuation of the company is pretty high, and that is why the employee feels it is beneficial to him if he takes a lower salary, higher ESOP. Not only takes a lower salary, but he's also ready to put in a higher amount to purchase that ESOPs. These are a few companies which have come in the forefront and have used ESOPs into given them to their employees. And Infosys we cannot forget, because a lot of employees of Infosys have become billionaires because of Infosys shares and ESOPs. So now let's understand what are the various routes for issue of ESOPs. One is definitely the direct route, wherein the company creates an ESOP pool. Now there is very interesting here. Usually what happens is an ESOP pool is being created, and you will have the number of shares, and then you have an ESOP scheme which is then filed with ROC, and so many number of shares become like earmarked or aligned for the ESOPs. But nowadays what we are also seeing is that many small companies, startups, they only create an ESOP pool, which is via a board resolution. They create an ESOP pool. Now this ESOP pool एक्चुअल में एक भी शेयर्स इश्यू नहीं हुए होते at this point in time. They have not even created a scheme, so they don't have an ESOP plan in place today. They don't intend to issue the scheme in the immediate 1 or 2 months. But if they are planning to go for any fundraise, what they do is they create an ESOP pool, and this ESOP pool becomes a part of your cap table, which is your capital structure. So whenever, if you're giving your capital structure of a particular company to any of the VCs, angels, or for any other valuation purposes, you will include ESOP pool as a line item, and the number of shares will be included there. But at the same time, this ESOP pools are not issued today, are not going to be issued immediately, but the number of shares would go up, the earnings per share would go down. So yes, this is also happening today. ESOP pool being created, and the ESOP scheme is then created later on. This is one option. Obviously, second option, you create the pool, you create the scheme, and directly you are issuing the ESOPs to the employees. As and when they get vested, they exercise their right. Company at that point of time issues the shares to the employees. The other routes, which is a little complicated, less used by startups, more used by bigger companies listed and SMEs, is the trust route. wherein there are three parties that are involved, which is the company, a trust which is formed, and an employee. And the basic objective of formation of the trust is that the company passes on those number of shares to the trust, and via the trust, whenever it becomes due, the employee receives the shares. Now, a very important point to understand that itna sab to ESOP samajh liya, but people come to us and ask, madam, mere ko mere consultant ko ESOP dena. In fact, people now come to us also, to us CAs and advisors, that madam, aapki fees ke badle aap ESOP longe kya? So we have to think today at the end of the session, should we start taking or not? And I need people's view on it. So yes, the point is who all are eligible for taking ESOPs. So one, and the very important thing, only permanent employees and directors, whether in India or outside of India, of a subsidiary in holding company are eligible for ESOPs. So sorry, we are not eligible to take ESOPs because we are not employees. But yes, we need not lose hope. We have other options how we can structure it. Second is who are not eligible. And this is very important to understand who all are not eligible. One is independent directors are not eligible. So when I say only independent directors are not eligible, other directors, yes. But again, there is a condition. If a director is holding more than 10% shares of the company and the eligible status has completed 5 years, then in that case, even he is not eligible under the ESOP scheme. Beyond that, any other employee who belongs to the promoter group is also not eligible for the ESOP scheme. This conditions and to understand who all are eligible and not is very important, because today startups have come up with various other options. In fact, we will discuss further wherein how ESOPs and Bharat Pay, and these are all companies, Byju's, they are giving ESOPs to their merchants and teachers also. So we'll understand further on how are they using it. This is the condition which we have seen, people, when they get a job in the startup and they get the ESOP, they are very happy. I got a great job. I got an ESOP of the company. But that becomes of value only and only when the startup succeeds and their share price goes up. Otherwise, you just keep on waiting and you get no liquidity over there. Now, here is a very, very interesting thing, which is called as the community stock option pool. Now, the community stock option pool, how many from the participants, we can see around 79 participants today, how many from the participants have heard of this concept of community stock options pools? Can we just quickly have some answers in the chat box? Is there anybody who has heard about community stock option pool? No. Jayesh bhai said no. Hemant says no. Pinky says no. Sanket no. Arpit no. Okay, I'm getting flooded with no now. No, never, never, sir. Prashant sir, it is happening. So the never is gone. Okay, I'm flooded with no. So let me tell you that this is the new and the creative instrument which startups have found today and are using it in the market. So it's called as the community stock option pool. Now the concept here goes as how they came up with this concept, I'll tell you, and we'll also discuss on the legality of this concept. As I said, that some of us very brilliant brains, some of the anybody from the participants and a couple of lawyers have put together this new concept called as the community stock option pool. So what here they do is they create a community. Usually we see that most of the startups have their own communities. They go to their community, basically their customers or anybody, and tell them, hey, you want to invest in my company? Come invest via the CSOPs, community stock option pool. Whatever money you will give it to me, that based on that money, I give you the right to buy the shares of my company. Or once I reach a particular limit, there are milestones which are defined in the startup journey. Once those milestones are achieved, at that point in time, either you can buy the shares of my company or I can give you the value, the stock appreciation, right? Say you entered at 5,000. You say you entered at 5,000 per share value of my company. And when you want to exit, at that time it is worth 12,000, then a differential of 7,000 is what I will give it to you in cash, and you will not buy the shares of my company. So this is the community stock option pool, wherein there is no actual issue of shares that happen. The amount, this is only via a agreement between the community holder, the ESOP holder, and the company. Only those two people, they form it via an agreement. They've so smartly, as of now, I'm using the word smartly because I don't see anybody raising questions today, but I'm sure tomorrow law should come up and raise questions on this instrument. But today, this is guided only by an agreement between two people. The money does not come into there is no entry in the capital structure. There is no money that comes in the liability side. People are charging GST on the ESOP amount. Whatever you buy, वो पैसे पे GST charge करते हैं. You don't get any voting rights. And at the end, whenever they want to exit, they get the money on that. They pay 30% tax, and they are doing it. But it is yet covered under the caption of community stock option pool. So yet it is a part of the option pools that works out. It is guided by some guidance note, and which is why the companies that are doing this are saying that they will not have any liability in the balance sheet for the money that people have invested via the ESOPs. We can go deeper if people have questions on this topic, because how legally this is fair, we need to definitely think over. But yes, I can tell you that today there are companies who are raising funds via the ESOP. This is ESOP and the SAR, the difference between the two, but we can take it up later when we're doing the ESOP stuff in more detail. Company stock price plunging 60%, and this is me with the stock options. Yes. So now let's understand when is the stock option valuation required. So first of all, as chartered accountants, and whenever people come to us and say that we want to have our ESOP scheme drafted, or we want to structure our ESOPs, it is important to know the legal compliances that are required. I, being a registered valuer also with IVBI, ESOP valuation is a separate requirement as per law. So whenever any company wants to issue any shares, any ESOPs to its employees, even before they do any compliances, management internally needs a valuation report to understand, because whatever is the ESOP value, a company has to take a P&L hit of that amount. And hence the management wants to evaluate how much is my P&L going to be impacted because of the issue of ESOP, which is where a valuation report is required before even granting. That is first. Secondly, whenever the ESOPs are granted, at the time of the grant of ESOPs, the company requires a registered valuer's report, which gives the ESOP valuation. Third, as per Ind AS, every time, a valuation report is required in case of a cash settled option at the end of each reporting period as per Ind AS. Now, whenever the ESOPs are exercised and shares are issued, that point of time, from the perquisite's perspective, from the tax authority's perspective, a merchant banker report is required. Now, why two different reports? Because today the situation for a valuer is that Companies Act only recognizes registered valuer's report. Income tax recognizes merchant banker and a chartered accountant. They don't recognize registered valuer. And hence, in both the scenarios, depending upon the statutory authority that is there, different valuation reports by a different authority is required. So to conclude, from the time of issue, at the time of grant of the ESOPs, a registered valuer's report is required before even we go further. Now, again, an interesting point as to how do we do the ESOP valuation. I'm sure most of the people out here are aware that whenever we do a share valuation, there are three methodologies which are used in the share valuation. Can somebody name what are the few couple of methods which are used for ESOP share valuation, equity share valuations? Yes, cool. Wonderful. Many people in the audiences are aware about the valuations and the methodologies that are used for valuation of equity shares. Now, at the same time, can you tell me is the method for valuation of ESOPs and valuation of shares, which is what DCF, NAV, discounted cash flow method, net asset value method. Generally, these are the two methods, most common method, which we use when we do the valuation of equity shares. Can you guys tell me, is the same DCF and NAV, are these two methods which we use when we do the valuation of ESOPs? Sudhir says no. Prashant says no. Dilip very rightly says no, because it is option. Absolutely correct, Dilip. Because in fact, we had seen once earlier wherein a valuer had used the NAV methodology to arrive at the ESOP valuation, which is completely wrong. NAV and DCF we use, but we use to do the valuation of equity shares, not for the valuation of ESOPs. Equity shares are valued using the NAV or DCF value, and those are taken as an input figure when we do the valuation of ESOPs. So there are three methods which are widely used for valuation of ESOPs. One of the methods and the most widely used method is Black-Scholes method. The second method, which we also use very frequently depending upon the case, is the binomial method. And the third, which we rarely use, mostly use only in case of cross verifications and depending upon actual valuations, which is where we use the Monte Carlo method. But the most common ones are Black-Scholes and the binomial method. But not only knowing the method, at the same time, it is equally important to understand when to use which methodology. So Black-Scholes method, the BSM, is used when there is a constant growth rate. If we see that a company is at a particular level and henceforth it is going to grow at a constant level, then Black-Scholes will going to be used. Whereas if you are valuing a company which is high growth or which has a cyclical growth, which is mostly the case with startups, wherein you see that, madam, next 5 years our valuation, our growth is going to be like 100% year on year, and after 5 years we're going to have a growth of 40% year on year. Now there is a high growth and again a variation in the growth rate during the period of the ESOP's expiration period. Then in that scenario, you cannot use the Black-Scholes method, but you will have to use the binomial method. And the third, as we said, that we usually use it, Monte Carlo, as a cross verification to understand whether you have not made any mistakes in the calculations. Now the difference between the Black-Scholes and the binomial model. Black-Scholes is the option is a European style option, then which is like exercise only at the end. Then the Black-Scholes model is a favorable methodology that can be used. But whereas it is an American style of option, then you have to use binomial. Now, when we go for a Black-Scholes model, we calculate log normal. In fact, for both BSM or binomial, we have to calculate the log normal of a stock price. When we use the Black-Scholes model, we are assuming that the stock price is normally distributed, which means that at a particular volatility, the company's stock price is going to be there. Whereas in case of binomial, we are being more practical. We are having more place to play with. And we say that in the binomial assumes that the basic price is that at the basic premise is that at any given point in time, the share price can move in two particular directions, which means it can go up or it can also go down. And hence we are being more practical and more dynamic when we are using the binomial method. Now, if you are either a valuer yourself or you are getting the valuation assignment done from any of the registered valuers or merchant bankers for your company or for your clients, the basic information which we will have to give is stock option plan, without which it is impossible for the valuer to value the transaction. We need to give the grant letters, the exercise letters. If during the course of the period, if any of the employees to whom the ESOPs were granted, they get terminated, then the terminal letters are important so that people understand how many ESOPs are actually are alive. We will need the financial statements, because using the financial statement, we will have to make a projection, come up to the equity value of that shares based on which the ESOP valuation will be done. What are the report parameters? The we need the report, the valuation report. The valuation date has to be the date on which the ESOP is granted. You can have the valuation date needs to be of that period, but obviously you can have a report of any particular date post that stuff. Now, these are how we understood what were the key parts of the ESOP scheme. Now we also need to understand that how valuation is done and what are the key inputs of ESOP valuation. The good part is that the terms, whether we use the BSM or we use the binomial method, in both the scenarios, the terms, the inputs are the same. And hence, if we understand both, it is we can at least understand the method a little more better. Though understanding a binomial method is a lot more advanced, but we will definitely try and touch upon at this point in them. So let's go further. Now, as we said, the fair value of the underlying equity shares is the key input for the ESOP valuation. If the company is a listed entity, we use the fair value using whatever is the listed price. If not, we will have to do the valuation. Second is the dividends, expected dividends on that share, risk-free return, risk-free rate of return, the exercise price, the expected option life, and the volatility in the value of the shares. We will go deeper in each of this to understand better. Yeah. So how do you determine the equity value of a share? If the shares are listed, then obviously the market price is available and you can take up the market price of the stock exchange on the stock exchange in which it is listed, and the highest volume is to be considered. Obviously, we have to consider the value as on the valuation date. If the shares are not listed, it's an unlisted, then in that case, we need to undertake the valuation of equity shares first using either DCF, NAV, market multiple, whatever is a suitable method for that company, arrive at the value of the shares of that company, and then use that number as an input figure while doing the ESOP valuation. The second is the exercise price. Now, usually this is a fixed number and the forms a part of the ESOP scheme. The price at which the employee is going to be getting the shares, it can be as low as 1 rupee, in which case the company's face value is 1 rupees. We have seen that exercise price, it is mentioned even 1. In fact, we have also seen that in fact, just last week, we had one of the client coming to us and saying that, hey, Niki, our shares are valued at 280 rupees today, and we are raising one round of investment. After 2 months, we are raising another round of investment, and the share price is now going to be 560, almost double. They wanted to issue the ESOPs today with an exercise price of today's share price, which is 280. Can they do it? Now, this is my question to the participants. Can the company issue the ESOPs with an exercise price which is 280, which is nothing but today's share price of that company? Yes, Hina and Pathak, Jayesh, Rajashri, yes, all of you are saying yes, looks okay. Absolutely, yes, they can, because it's not important that whether what is the share price of that company. Coincidentally, the company wants that whatever is my current share price is the price they pay for it, and they take the ESOPs. But ideally, it is a price which the company decides at their own. It can be face value, it can be the current share price, or it can be any other price that they want to. So it is possible. Again, when just checking on the chat box, there is a message which says that valuation report of unlisted share can be how much old. So ideally, Arpit, it is said that you cannot have a valuation. Ideally, you're doing the ESOP valuation, and the valuation date के दिन का equity share value आपको चाहिए. So ideally, it has to be of the same date. But in practical scenarios, I have seen that people use a report which is even less than 6 months older. They are using it, provided there is no change in the value of that company. But again, that would depend upon the valuer to choose how much older report they want to use it, because the concept says that the value has to be, value of equity shares has to be as on the valuation date. I hope that clarifies. We'll go further. The expected option life. Now, this represents the expected life of the option, considering the grant date, the vesting date, the exercise period, expiration date, expected early exercises during the eligible period if supported by history. Now, say, for example, what happens is, at times we have seen that in case of, especially in case of listed companies. Now, whenever the company, in case of listed companies, whenever the employees see that the value of their shares of their companies are going higher, which is where they go ahead and exercise their rights of ESOPs, get the shares against the ESOP and go ahead in the market and sell it, because that is the moment they get a better value. So it all depends upon when the prices are fluctuating of the particular company in case of listed entity. Usually in case of startups and unlisted entity, we haven't seen people exercising the ESOP in between. It is usually end of a particular period on happening of a particular event, which is where the ESOPs are generally granted. But when we do the calculation of using the Black-Scholes model, expected option life is a methodology, a formula which we have to use to come at the number. Now, very, very important term. Till now, whatever terms we used were pretty normal, okay, understandable, and similar to the terms which we are using or we are used to using in the NAV and the DCF methodology. But volatility is something which is unique to the ESOP valuations and also one of the critical part which determines the entire ESOP valuation methodology and ESOP valuation numbers as well. So now, what is the definition of expected volatility? So this represents a measure of expected fluctuation in the price of the price or the value of the equity shares. This is measured using the standard deviation as a basis. How do we compute it? Very important. Let me answer a question here. How do you calculate beta in when we do the valuation of an unlisted entity? Yes, so the question is that how do you calculate beta when we do the valuation of an unlisted entity? Do we use a comparable companies method? Yes, we use the comparable companies and get their value from the stock exchanges. Absolutely correct. Thank you, Sudhir. Thank you so much. Correct. Absolutely true. Thanks, Tejas. Absolutely right. Right, Arpit. So what happens is, since how we calculate beta, we use the comparable companies pricing, and then we use that as a basis when we do the valuation. Similarly, when we do the volatility calculation, in case of ESOP valuation, we calculate the comparable company's price volatility. If it is a listed company, obviously its own volatility and the volatility of its peers in the same sector are considered. If it is the shares are unlisted, then generally volatility is computed for the shares of comparable companies, and then they are used as a proxy in case of shares of unlisted companies. Again, very important is historical volatility analysis is what we usually perform, but what is required is the future volatility, because what is important is, though the company share price year on year would have gone up by 20-30% in the past 3 years, but we need to calculate what is going to be the forward looking 3 years and what is going to be the volatility of the company shares forward 3 years. But though for calculation purposes, we do use the historical volatility analysis. Here one question comes up, and which is also a practical question when you do the valuation of startups, is that what do you do in case the client tells you that, hey, none of the listed companies in India are my comparable companies? How we are going to be calculating the volatility in such a scenario? And since it is a startup company, such kind of situations are pretty common that they may come up. In such scenarios, one of the methodology which can be used upon is that we go ahead and assume the volatility of the related sector, nearest sector that is available, or you can also try and go ahead, make the adjustments to the volatility of a similar sector abroad, how they have performed. But obviously, how we do country risk adjustments, similarly, a couple of adjustments needs to be done to arrive at the volatility for those companies in such scenarios. So now, Okay, so this goes into the steps on how do you calculate the volatility, which can be taken up later. Then we go to the expected dividends. So now here what is important is, again, we are not calculating the dividend of the past. We are calculating the dividends of the future, which is the future expected dividend. So you won't find it anywhere, this data. This is something which needs to be discussed with the management and arrived at as to how much dividend they are expecting to give in the future. But again, one more important thing that needs to be taken into account is here that it is a dividend yield is to be considered, and that as a percentage to the fair value needs to be arrived, not as a percentage of face value. This is a common error that we have seen people making. Now, again, the risk-free rate as one of the inputs, but this is pretty simple. It is usually the government bond yields, which is what we use in the valuation of shares also. We require to take the return, whatever is the period of the ESOPs. Say if the ESOP is for 3 years, then the tenure of the government bond considered is usually matched similar to the future expected option life that is considered. Okay. Now, what is the movement of the in the option binomial pricing model? Now, we begin with a single pricing model, and then based on it, we keep on stitching different multiple periods over the model to arrive at the binomial model. Let me just stop the screen for the time being and take you through the format of valuation. Shilpa, are you able to see the screen? I think the screen sharing is
नहीं मैडम, अभी तक आपका स्क्रीन शेयर नहीं हुआ है. स्क्रीन का ऑप्शन आ रहा है, मगर आप शेयर पे क्लिक करेंगे ना तो शेयर होगा मैम.
correct. I did so, but it is showing me it is share screen is stopped. I'll take a minute to see if it's possible. Otherwise,
still it is not showing.
Yes, no problem. I'll just do it again. Now I think it should be visible.
Yes ma'am, अभी आया.
Yeah. So we also have to get used to tag. Murtuza was very rightly saying that we need to adapt to the tag. See, this is the methodology of calculation of binomial model. We have the inputs that we just discussed, the asset price, the strike price, the total time period for which the particular ESOP is going to be there, how many times you want the methodology to do the calculation, the steps, what is going to be the volatility of a particular share price of a particular company, the volatility, the risk-free return, and the dividend. These are the basic input figures. One, we have it. नीचे का जो सारा है, this exercise we did not do, this Excel कर लेते हैं, हमने हमारा काम कर लिया, अभी Excel करेगा, and it takes the calculation to over 100 nodes and comes up with the value of ESOP using the binomial method based on the different exit the employees has, based on the different vesting period that they have, the percentage in which they get granted, we come up with the entire value. So whenever we as chartered accountants are doing the valuation, what is more important to understand is whenever the valuer is using the methodology, whether they are using Black-Scholes or binomial and whether they are apt is enough for us to take care. But yes, if we want to look forward, expand our work horizon, become a registered valuer, do the valuation of ESOP, or when it is for internal management purposes, and we want our clients to give them some idea, we need to understand the methodology and working of the Black-Scholes method and the binomial both. We have the Black-Scholes calculations also over here, wherein we calculate the stock price, same inputs figure. Important is to understand on the volatility. Let me just show you here. Here, for an example, we have calculated the volatility, which is the log normal of the share price of a particular company. From the data from the NSE side, we can pull up the share prices, calculate the log normal, come to the daily volatility, which is calculated using as the standard deviation, arrive at the annual volatility, and based upon that, we come up on the volatility exercise. I will not go much deeper. It is because it is a lot more technical when it comes to valuation. So we'll keep here only to the extent it is required for us to understand the entire ESOP thing. Okay. Now, beyond this, what I also believe what is important is that we understand what is the tax implications when these ESOPs are granted, what are the tax implications at the time of issue, and which is where I believe Darshak would be the one who will be taking up the session. So Shilpa, just give me a sec. I will check on the Darshak whether he's already joined. So Shilpa, he'll be joining us here only. So in the meantime, what I suggest is we'll not waste time. We'll take a minute. In the meantime, we'll complete the questions that are there in the Q&A.
Yes, go ahead.
Okay. If we begin from first, Ravish is asking, can we put current valuation and future upside as compensation offered to employee under ESOP grant letter to employee, or we can just mention only number of shares offered? Okay, can we put current valuation and future upside as compensation offered to employee under the ESOP grant? Okay, we have Darshak here. I'll just get him in and we can speak on the tax. Come, Darshak.
Niki, there are so lots of questions also, so we have to keep time for that question.
Definitely. I think we'll take another 20 minutes on the tax front and then go ahead with the questions.
Fine, fine.
We have Darshak sir for the next few minutes. So before he starts his session, I would like to introduce him formally. CA Darshak Shah is a FCA, BCom and LLB. He is the partner of SN & Company, a leading corporate tax advisory and business analytic discipline of the firm. He has worked with KPMG and NA Shah Associates before joining this firm. He is of the opinion that I believe in advising others, which I can implement. He has active participation as a member of International Tax Committee of PCS, regular writers of articles, white paper, and blog on private platform. He is also speaker on taxation subject, invited by esteemed associations. He is also pre-post budget analysis committee member. He is also actively writing and sharing tax principle on Tax Concise WhatsApp group, handling 100+ high tax litigation matters in a year. His topics of interest is faceless assessment and appeals, digital taxation, GAR, startup taxation, capital gain, etc. So to his achievement, he is awarded by WIRC study groups on multiple occasions, and recently his firm is awarded with the best risk audit firm of the year. With this brief introduction, I request Darshak sir to take the next minutes, and then we will solve the queries of our participants.
Thank you. Thank you so much, Darshak ji, for coming in and accepting. Thank you so much.
It seems I just asking Niki, and she was saying that this here the women speakers are generally been allowed. So I am being the exception, I think so. And Chami, thank you very much, because
we can hear from the male members also. That's not an issue.
Yeah, you can, male member can assist female member.
Well said, well said. Well. So Charmi, thank you very much for giving this introduction. Generally, I have seen the introductions have been very fast, where the generally the audience remembers something and leaves balance one. But you have been very calm while giving that introduction. So thank you very much for that. I'll quickly run through this tax implications which are related to ESOP. Of course, if you have questions, you can post it in the chat group, and woman speaker will answer those questions.
Not relating to tax, huh? Not my cup of tea.
Okay, let's go ahead. So, whether the allowability of ESOP expenses on the part of employer. So generally, this was one of the question, that when the ESOP will be allowed as an expenditure. Just to give you small background, what happens is ESOPs, whenever it has been granted, okay, as you must have heard about, that there is a valuation which is done, and once that valuation is done, then you are aware about that, okay, what is the expenses which I will have to incur. Now the question is, when will this expenditure be allowed? So there had been an argument that this expenditure should be allowed only at the time of exercise, because that's the time when the liability is actually getting crystallized. So this argument was placed by the department in case, and therefore department was trying to say that till that point of time, it is a contingent liability, and the moment of ESOPs are exercised, it becomes a final liability, and therefore at that time the expenditure should be allowed. This matter went before the Supreme Court. So there was Karnataka High Court who finally ruled that it is a certain liability, though the amount cannot be quantified. So we are not able to quantify the amount at the time when the amount is, when the ESOPs are granted. But the moment the ESOPs are granted, it becomes a certain liability, and therefore whatever provisions which are made as per the valuations in the books are allowable as an expenditure on a proportionate basis. So that's what and that is also so the matter then went to Supreme Court by way of an SLP, and it was the same ruling which was accepted there. So therefore the status is that we can claim that as in revenue expenditure on a provisional basis. Taxation aspects of ESOP for employees, by and large, I think people are aware about. I'll just touch base to this thing. For the employees, basically, it is going to be taxable at the time of exercise of the ESOPs. And that is going to be the fair market value, which is worked out by a merchant banker. So that fair market value will be considered. And on that, if there is any exercise price, which the employee is paying for getting these particular shares, then that of course will be reduced and the balance will be considered as perquisite, right? So as an example, 100 is the fair market value, 20 rupees is let's say exercise price which employee is paying, then 80 rupees will be considered as perquisite. While later on when the employee goes and sell these shares, okay, at that point of time, this particular 80 rupees, which is the fair market value of it, will be allowed as a cost. So that is what the provision is saying all about. Just a second. Right. So that is what the provision is saying. So I'm sorry, I just made, I'm saying whatever is the fair market value. So in our example, 100 rupees is the fair market value, on which I have already paid the tax. So therefore, that will be allowed as the cost, and sales price, of course, will be the price at which he is going to finally sell. So difference will be considered as capital gain. So that's about the tax treatment for the employees. There was a lot of cry which was there from the startup companies, because they were of the opinion that startup companies, while you grant the ESOPs, or sorry, while you allot the ESOPs, at that point of time, because of startup not having large liquidity, therefore they have to hold the shares for a long period of time, and only when there is a change or when there is an investor coming in, at that time they can liquidate. So therefore they were not ready to pay the tax at the time of allotment. So government realized it, and therefore they give that relief, and therefore they have deferred for the startup companies who are eligible startups, okay, who have passed through the registrations. The employees will not be taxed in the year in which the shares are exercised. Okay, the ESOPs are exercised. It will be taxable. There are three stages or three events on which it will be taxable. Event 1 is 5 years from the date of allotment. Event 2 is if he leaves the employment. And event 3 is if he sells the shares. So there he gets the liquidity, and therefore he will pay the tax at that point of time. Now, how the tax computation works is something which I have just presented here. So if you are able to see, there's a perquisite value, okay, which is other than ESOPs. So salary and perquisite value. ESOPs is having a perquisite value. So total is 1 crore 30. On that, the tax works out to be 44 lakhs. Now, what will happen is so 44 lakhs is worked out considering the fact that ESOP value is taken for the purpose of calculation of the tax liability. But when to discharge the liability, calculation will differ. So what will happen is this 44 lakh into 40 lakhs, which is actually the salary income, divided by 1 crore 30, which is the total income. So that much amount will of course be paid now because that is on salary and not ESOP, and balance will be paid at the later stage as we discussed, or in any of the three events which we spoke about. So that's as far as the startup companies are concerned. Now, let me also give you a brief about what is this difference between ESOPs and SWET. So basically, here you have
This we have spoken.
so this is SWET. Okay. So I think Niki is just saying that what are the restrictions, what are the eligibility for ESOPs is already discussed. So I'll just share about what is about the difference in SWET. So SWET are all the permanent employees and directors, whether in India or outside India, who are into business for more than 1 year. So that is the company rules requirement that they should be there in the business for more than 1 year, and therefore they will be allowed to have the SWET. Valuations, of course, Niki have spoken about, and SWET, basically there is a condition as per the company's law. Since we are not onto company's law, so I'm not getting into it, but broadly what it says is that there are some restrictions under the company's law to issue SWET equity, the quantum of SWET equities which can be issued. Taxability is, as we spoke, when the SWETs are allotted. So basically at that point of time, it is taxable. The taxable event is at the time of allotment of SWET equity. Just to give you a brief about what is each one of this particular instruments which are available for incentives for the employees, I'll just give you a brief about it. So what happens is, let's say in case of ESOPs, okay, I'm just going to this portion where it says that impact to PNL. I'm on the third last line. Okay, on the third last line, impact to PNL during vesting period, and grant value minus exercise price. So that is the impact which will have on a PNL. When we go to SWET equity, it is going to be the fair market value, because that is the same time it raises a taxable event. In case of a SAR, impact to PNL at each reporting year until liability is discharged. Okay, so that is as far as the SAR is concerned. Phantom, basically impact to PNL each reporting year until the liability is discharged. Again, the same. So SAR and phantom works together. And lastly, in case of in case of CSOPs, so in case of CSOPs, the impact is that basically it is going to be a revenue receipt, and the expenditures will be on the payment basis. Now, CSOPs is where basically what I understand in a layman's language, if I want to put it up, it is like an example of a company who is allotting the lottery tickets, and when the lottery is actually getting due, or when you are actually getting the lottery, at that point of time you are being paid certain heavy amount, right? So when when a subscriber is subscribing for a lottery, he is paying to the company, so that is a revenue. And when the when the company is giving the prize back because of winning of the lottery, at that point of time he is getting an extra payment, which is an expenditure for the company. On the same layman's format, I would just explain this, that ESOPs also works in the same way. Now, when we talk about taxation, as I spoke, taxation is on exercise price at the time of exercise for ESOPs. For sweat, it is at the time of allotment. For SAR, it is at the time of receipts, and phantom again at the receipts, and CSOPs is at the time of redemption. What is going to be the taxable value? Then in that case, fair market value minus exercise price is going to be for ESOPs. Sweat tax on fair market value. SAR, of course, it is going to be at a differential value, because whatever allotment value is there, allotment value, so whatever is going to be the incremental or appreciation value which you are getting, that is going to be the taxable value for SAR. Phantom is basically taxed on differential value minus business income. Why am I saying is minus business income is because phantoms are generally, a lot of consultants are right now subscribing for this particular instrument. And therefore, if I have already offered certain amount as business income, and on the receivables, if I'm getting against the receivables, I'm getting the phantom shares, then of course I'll reduce the business income to that extent. CSOPs is basically a tax on the redemption value minus the investments amount. So let's say if I have given 1 lakh rupees for CSOP, against that if I'm getting 1.5 lakh rupees, now therefore the question was that whether in the hands of that investee, sorry, in the hands of the investor, whether it is going to be 1 lakh 50 which is going to be taxed, or only 50,000 which is going to be taxed. Now ideally it should be 50,000 which should get taxed, because I have invested a lakh of rupees and I'm getting 1.5 lakh rupees. But of course, like crypto earlier, since there was no clarity, and now they have brought in a different format, here also they have, because it's a new concept, there is no complete clarity available. But yes, ideally this should be the position. But once it is going to grow up, later on the regulatory will come out with some clarity on this, and we'll be able to know. Therefore, I have marked a question mark over there. I think I am done as far as taxability is concerned. And of course, as was started, while I started, somebody said that we have a lot of questions. So of course, we are happy to take these questions.
From question and answer session, question answer division. First is from Ravi's. Can we put current valuation and future upside as compensation offered to employee under ESOPs grant later to employee, or we can just mention only number of share offered? You can see in Q&A session.
I will just read up. You're reading to Ravish?
Yeah. Can we put current valuation and future upside as compensation offered to employee under ESOP grant later to employee, or we can just mention only number of share offered?
So Ravish, what happens is when you call a upside compensation, it is usually the ESOPs have turned into stock appreciation rights. Say for example, the current valuation is 100, and you are saying that, hey, if the prices go up from 100 to 150, the differential 50 is what we are offering to you, which is the upside as compensation, which is nothing but stock appreciation rights. We go to the next question here, which is who are the actual holders. Before we go on to the Q&A, what I would like to do is just also sharing across one of the, as we just discussed on the stuff, the tax concise group, wherein we have been, Darshak has been sharing across most of the insights on the taxation front, which I'll just keep it as a screen here, and we'll move on to the questions. Okay. Who are the actual holders of shares in the ESOP pool? Oh, Prashant, that's a very, very interesting question. If we are talking of only about the ESOP pool, then today nobody is the holder of it, because the shares are not actually issued, and those shares are nowhere today. They become only when they are actually, the scheme is created. So next question is, in which part of the startup life cycle Series ABC funding comes? Sir, in all the Series ABC are the rounds of funding when they do it, and hence at each stage funding comes in all the stages. In fact, before Series A also funding comes in. We'll move on next. Mentioning only dollar terms creates ambiguity. Employee feels it is RSU, strike price 0. Do you suggest communicating strike price as well? Suggesting the strike price in the ESOP scheme is a must. So there is no scope, according to me. We have to suggest the share price, and it is compulsory required to be mentioned in the ESOP scheme, whatever it is.
Mentioning only dollar terms creates ambiguity. Employee feel it is RSU, strike price 0. Do you suggest communicating strike price as well?
Should I go ahead, Pinky?
Yeah, sure. Community stock option. Did you mean it is a SHA, but actual delivery of share doesn't happen? Who hold the shares? Can you share the guidance note?
Okay. I will share the guidance note to the organizers that is applicable to here. And so it is not an SHA, because SHA is the shareholder agreement. In case of an SHA, actually there is a shareholder who is getting shares. In case of a community stock option pool, there are no shares which are issued. It is only a contractual agreement between the investor and the investee that on a particular event happening, either you can subscribe to my shares, or you can take the money which you have invested with the upside based upon that event happening. So in actual terms, it is not an SHA.
Okay. Indian ESOPs are European options, right, or not American options?
So they are, see, generally what I have seen is most of the options are American options, because as I gave you an example, that the person wants to subscribe to the shares at the time when they are higher. So there is no binding that only at the end of the period you can go ahead and subscribe. They have an option that, okay, example, Metropolis ka share price बढ़ रहा है, so they want to go, if the shares have been vested, ESOP has already vested, they can just go ahead and exercise their right. There is no need to wait till the end period. So in most of the scenarios, practically we have seen it is American option.
Okay, fine. Could you please elaborate on the GST aspect on community stock plan?
I had told you, community stock option is something very, very interesting and upcoming and creative. So what we have seen is that in case of a community stock option plan, GST is charged. Say for example, the investor is putting in 5,000 rupees as the ESOP, I mean CSOP, they're buying the CSOP worth 5,000. Then that 5,000 may say 18% GST is what the company has to pay, because they sold the CSOP to you. That is how the mechanism is working today.
I think just one thing to add here. Of course, the next question then comes is that in case if I'm buying an CSOP of a lakh of rupees and I'm paying 20% extra GST against which I'm not getting a credit, then that is resulting into an additional cost. So answer is absolutely yes, that is happening. But what happens is when an investor is investing into a startup, he is looking a gain which is much, much beyond that. So therefore, he is ready to spend 20% extra as a part of the investment cost, so that he is able to generate and accelerate the price or the value which he's going to get later. So therefore, he is ready to do that. Yeah.
Okay. What about valuation requirement under accounting standard? Need to be done at the end of every reporting period?
Sir, India आ गया तो मैं accounting भूल गई, accounting standard. I'm not very sure how the accounting standards work, but as per India, it does.
But what as per India's we can?
Yes, India it is required at the end of each reporting period, especially in case when it is a cash settled option.
Okay. How the advisor equity to be issued?
The phantom shares. Phantom.
Okay, so
please.
Okay, so basically what I'm understanding this question as consultant. So let's say if a
Yes,
consultant wants
yes,
to,
I think.
how will we take it? So there are two parts. One, as Niki was saying, phantom shares. So here, in case of phantom shares, there are no equities which are actually issued. Okay, there is a commitment which is coming from the company, and therefore, whenever the company is going to reach to that particular level, the commitment will get fulfilled by the company, and the consultant will be paid for it. To give an example, let's say, for example, today I'm getting into a XYZ company with a commitment that if I consult them, then I'll get 5% of the value which they will get after 10 years. Okay. Now, after 10 years, when the company reaches to that particular value, the company will pay me 5% of that value which has been agreed upon. But there is no equity which is issued. So it is similar to SAR. Point number one. Point number two, let's say when you want to have it in an equity format, currently on a practical ground, okay, preferential allotment is something which is being to get this particular equity.
Good. Next question is, ये सभी के लिए है problem, valuation के लिए. So under income tax, valuation report from both merchant banker and CA reports allowed.
So section 17, which is basically governing this perquisite valuations, they are saying that at the time of exercise, it is a merchant banker's valuation which is allowed.
So in income tax also CA reports are not allowed?
For the purpose of ESOPs, while you are exercising the ESOP, at that point of time, the value which is to be considered for the purpose of perquisite will have to be merchant banker's valuation.
Okay.
So Pinky, I think this confusion is coming up because I said during the session that income tax recognizes merchant banker and CA.
Correct.
So for all general purposes, yes, CA reports are allowed at a couple of places, but to be specific, that in case of perquisite calculation, only merchant banker report is allowed.
Yeah, I think in case of buyback of shares, CA valuation is allowed.
That's a different thing. So as far
Yeah.
as ESOP
So-
is concerned, there is a specific condition that the valuation should be from the merchant bank.
Okay, okay, thanks for the clarification. Can we touch upon accounting of ESOPs if time permits? So we are running late, so out of time. FMV certified by merchant bankers required for tax calculation. What if the company is based out of India and there is FMV certified by valuation agency in respective country? Is this acceptable?
You were saying something, Darshak?
Yeah, I was. So let me.
You can stop sharing your screen because it is getting, I mean, full screen. So
Oh, yeah, sure.
yeah, please.
So I was just saying that from the accounting perspective, the previous question which was just there, I'll just share that what happens is there are different. So there is a guidelines note which I'm sure people will be aware about. And that is publicly available. So it is a very detailed guidelines note which is issued by the institute, which takes care of complete accounting exposures of ESOPs. Now just to add one point, if you are talking about ESOPs, because at the grant date, you know the value which is going to be there at the time of exercise. That valuation minus the exercise price is something which will be proportionately divided over the period of over the vesting period. So that's from the grant date till the exercise period. That between that till that period, it will be proportionately allocated, and that's how the same will be expensed out in the books of accounts.
Okay. From where we can get FMV for the purpose of calculation of capital gain in case of employees security is not listed?
Where is that question?
If basically if they are asking for unlisted shares, from where we can get FMV if in case of unlisted shares?
Merchant bankers report.
Yeah. So how is the ESOP taxed if they are exercised and sold at the same time, as in we exercise the issue and sell it immediately?
So I think in that case, the implication or will remain the same. So let's say today
Yes.
at 12 o'clock, I got the exercise value. So I have a fair market value of that. So that is the value which will be considered. Now let's say if in the evening at 3 o'clock, the price has got increased and I'm selling it at a higher price, then that price will be, let's say 120 is the price and I got the shares at 100. So 20 rupees will be my capital gain. Let's say if it is the price at 3 o'clock is 80 rupees and I have got the shares already at 100, then there will be a capital loss. That's how it will be functioning. So time will not matter as far as the treatment is concerned.
Yeah. One question is, can you elaborate more on the fancy structure related to ESOP, which you mentioned at the start of the session?
Yeah, so today, as I mentioned that, for example, Byju's, they are using the teacher stock option pool. Bharat Pay is using as the merchant stock option pool. So they are creating, this company startups are creating ESOP pools for their employees like teachers and merchants, and giving them the benefit, all the benefits which are there for ESOP are being made available to them. And they are called as TSOPs or MSOPs. And that is how people are using it today. Beyond this, obviously, the other structures that we discussed and the conventional structures are the stock appreciation rights or phantom stocks or restricted stock units, which are being used. But TSOPs, MSOPs are the current structures, the fancy new stuff.
Correct. If we add more ESOPs to an existing ESOP pool, do we need to create a new ESOP scheme?
Yes.
Foreign.
So here, let me clarify one thing. See, ESOP schemes, if you belong to the same ESOP scheme, see, there are multiple schemes for different categories of people. Now, if you are having an ESOP scheme A, which is for one category of people and you want to add there, you can do it. But in case if you want to go for another category B of ESOP scheme, then of course the shares will be added to a new ESOP pool.
Okay, so it will be according to category wise. Okay.
Yes, absolutely.
Foreign holding company have given ESOP to employee of Indian holding own subsidiary. What will be specific tax implication from the employee point of view of subsidiary?
Yeah. So what happens just here, the foreign company, when they are giving ESOPs to the employees of Indian company, a foreign company will recover that particular cost from the Indian subsidiary. So when the Indian subsidiary is going to pay that amount to foreign company, one implication, of course, will be transfer pricing. Second implications will be Indian company will claim that as an expenditure. And treatment number 3 will be that when this ESOPs are actually exercised, Indian company will be considering that as a part of perquisite, and perquisite tax will be charged by way of TDS.
Okay. Okay. Even if there is no actual holder of the shares in ESOP pool, we should consider these while calculating value per share, right? If there is no actual holders of the share in ESOP pool, we should consider these while calculating value per share, right?
That's a very interesting and a debatable topic, that whether when an ESOP pool is created. See, as I told you, that ESOP pool is being created on 2 stages. One is wherein only via board resolution they are keeping some shares as a side, and second, wherein the pool is created and then even the scheme is created. So obviously it needs, and the letters are granted. Obviously, when the pool is created, scheme is in place, letters are granted, obviously it needs to be considered. But when it is only a pool being created and nothing is on record, it obviously depends upon the valuers to choose whether they want to include it in the calculation or not. So it's a gray area today, and different valuers have different views at this point in time.
If there are multiple grants in a year, can the company use the last ESOP valuation report? Is there any validity of ESOP valuation report?
Yes, they can. They can.
Up to how many months they can use the valuation report?
So the ESOP valuation report for that same particular scheme, when you're doing the grants, you can use it.
So for the perquisite,
So it's not for perquisite. I hope the question is not with regards to perquisite, because Darshak is mentioning that if it's regards to perquisite, then the report is valid for
6 months.
6 months. But
Yeah,
I think the
that's why
question that is being asked by Arpit is that the ESOP valuation report, which is
yeah, they are saying if there are multiple grants in a year,
yes. So what happens
can
is
the
when
company use the last ESOP valuation report?
what happens is when the ESOP is granted, the scheme is launched, not necessarily all the ESOPs, all the options are granted at the same time. Some employees may be granted today, and some employees may be granted after a month. In that scenario, that becomes multiple grants in a particular year, same ESOP valuation report can be used. But once you go ahead and then exercise, at that time, jo valuation report lagega from merchant banker, that has a validity period of 6 months.
Yeah, we have answered the question of Rajshri for foreign company, holding company, and so.
Correct.
No, but they are saying that in case ESOPs are of foreign company and are sold by Indian company's employee, the Indian company deduct tax on CG, the employee's claim. How is that happening?
Yeah, in fact, this is happening today because it says in case ESOPs are of foreign company and are sold by Indian company's employees, the Indian company deducts tax on capital gain, the employee's claim. How is that happening?
In case, just a minute. In case of ESOPs are of foreign company and are sold by Indian company employees, the Indian company deduct tax on capital gain. So if this
I think they are saying that they deducted TDS on employee salary for
if this
that.
person is available, I think we should understand this question because
Yeah, I am also a little bit confused about this question. What they
he's
want
saying
to
that Indian
clear.
company deducts tax on capital gain the employee's claim. So this is something which we'll have to understand the question properly. So if he is available, we can raise this question and we can answer. I'm sorry, if she is available, we can understand this question better.
Okay, we can take afterward if she will help. In case of unlisted shares, while calculating volatility, can we take just one company or should we take more than one company? Also, what is the period for which we should go historical?
Okay, so in case of unlisted company, I believe we should take more than one company because ideally the sector, you move to the sector and then you move to company. So you should take more than one company. That is first. Second, what is the period? So whatever is the period of the options life cycle, that is the period which you should go historical. If the lifetime to expiration is 3 years, even you should go 3 years historical for the calculation of volatility.
Okay. Is there any approval required for shareholders for community stock option scheme since they made dilution of equity holding of existing shareholders on happening of specific event?
Yes, there is, and that is governed via the articles of association and some approval and changes in the AOA is how it is working today.
Okay. Can you throw light on MSOP? MSOP, we discussed that. We had answered that. How does the startup treat the CSOP amount received from an income tax perspective? Is it business income?
Yes, they are taking it in the revenue, right?
So
revenue or business income, it's other income or business income or capital income, whatever.
Yes. So right now, this question is there as a part of discussion and in question. So there is no clear answer to be very specific. But yes, I have come across one of the entity who have taken it as a business income. Now, whether this is right or wrong, of course, that is a question which is there for debate. But practically, I have seen one company who has taken as business income. That's what I can say. I can't give you a very clear right answer, yes or no answer. That's not something which is available with me.
Phantom shares consideration received by professionals, say CA, does it not qualify as contingent fees and not allowed as per code of ethics?
I think ये answer तो अभी Pinky Madam, Shweta ji और others in this room are more capable to answer than us.
वही मैं आंसर क्वेश्चन पढ़ते वक्त यही सोच रही थी कि मेरे ऊपर ही बाउंस बैक होने वाला है.
So I will excuse myself from this answer and I will leave it up to the experts to answer.
That I have to check whether this will be allowed as per code of ethics or not. But I think people are doing this, and in the startup also the consultant are taking ESOPs and phantom shares.
So
But
next time if I get a proposal, I'll say Pinky madam ne allow kiya tha, so we can take it.
नहीं, but whether they have COP or not, that is one thing I have to check. क्योंकि क्या है, आप स्टार्टअप में कंसल्टेंसी के लिए आप COP लेना जरूरी नहीं है कंसल्टेंसी के लिए, तो if you are not certifying or you are not signing anything. So which standard guidance note is currently applicable for accounting for ESOPs in case of startup company? Is this same applicable for income tax? Standard guidance note.
So it is available. And if the person tries to browse it up in net, he will be able to get. It's easily available.
So there is
Now,
an
is it
accountant.
applicable for income tax? In which context he is asking? That is something which needs
Accounting for ESOPs in case of startup
So
companies.
from income tax, what is it trying to ask?
Accounting means accounting of companies, how the accounting of company in case of ESOP.
Pinky, I think after this question, we have to wind up. And what we can do is questions are left.
Yeah. There is one question is there, Sweta. So I think we should take that also. उसको भी एक को भी बेचारे को मायूस नहीं करना चाहिए. एक ही बचा है तो.
I know I am.
नहीं लास्ट क्वेश्चन नहीं अभी एक और ले लेते हैं. वो लास्ट ही है तो उसका भी ले लेते हैं ना, क्यों उसको भी वो करें. यदि ये गाइडेंस नोट नहीं भी है ना निकी, तो आई विल सजेस्ट कि ऐसा गाइडेंस नोट we will check that if there is no any guidance note or standards are there, we will sit on that and we will try to publish that.
Great. So it has reached the right people. The question has reached the right people.
Yeah. But आपको देख के बताना पड़ेगा कि है कि नहीं standards and guidance note available.
No, it is there. It is there.
Yeah. So holding period for computation of CG to be calculated from the date of exercise, or employee can consider period from grant or vesting period.
Holding period for calculation. It is from the exercise date.
ये इसने क्वेश्चन का आंसर दिया जो राजश्री मैडम थे ना. Regarding my earlier question, in case ESOPs are of foreign company and are sold by Indian company employee, the Indian company deduct tax on CG, the employee claim. How is that happening? जो question था ना, इसके लिए he is saying that if the employee had told us that the company has deducted the TDS on capital gain generated on sale of ESOPs. Is that possible and is this happening? However, generally the company deducting tax on the perquisite only.
Ma'am, can we do one
CG,
thing? Can we just ask Rajeshri to raise this question separately on an email?
Yeah.
I can answer this question, or even she can also send this thing to the group which we have created. Of course, there also, because that group is mainly for this for our community, CA community, where they can raise the questions and we can discuss those questions.
Yes, sure.
So, anybody who really wants to be participative in that particular group, they can go to this particular link and join to this group. So this group is mainly designed only for that purpose, that whatever contents which are available as an article or something, we can concise it and spread it to the community.
Yeah, and Darshak, I want to request you, if there is any guidance note or account standard for this accounting and taxation of ESOP, so please share with us. Or if there is no any guidance note, we will be in touch and we will try to publish this from WIRC platform.
Definitely.
Okay, and there are so many questions, but because of time, we have to wind up. So we will take all the question afterward, or on email. Darshak or Niki can reply. So now the Thanksgiving. Okay. Charmi, you want to take?
Yeah, ma'am, you want?
Please. No, please, you carry on.
Okay, so on behalf of WIRC, I give a hearty vote of thanks to Niki ma'am and sir. They have taken the complete session and the topic very clearly in deep sense. Amateur can also come into this valuation field after attending this session. Thank you, sir, for giving your insights on tax implementation and solving the queries of our all participants. You have made each and every doubt of the participants very clear. Thank you so much.
Yeah,
Thank
we
you.
today we learned so many options, American options, European options, and community stock options. So we learned lots of new terms also. So thank you, Niki. We will be in touch for that publication if it is not there. Okay.
Thank you so much. Thank you for inviting us, and it was pleasure talking to all of you.
Thank you.
Thank you. Thank you.
Thank you very much.